Becky, I'm just noticing something that we should bring up because it's going to be of interest to everybody, and certainly in the market today. Bank of America has just downgraded Apple. Believe it or not, on the heels of our conversation, they're downgrading shares to neutral. They say risk-reward is now more balanced at these levels. They say they had argued for a valuation multiple, reiterating in their note back in June. And they say since then, the stock has had such a rapid multiple expansion. They point to a number of other issues as well. Lower impact from share buybacks, right? Apple buys back a lot of stock. They say there's going to be a lower impact there, a potential risk of a higher tax rate in the event of a domestic win in the U.S. elections in November. Talking about COVID-19, services deceleration, lower gross margins overall. But it's interesting, Mike, as you look at us, look, Goldman Sachs in the last couple of weeks has reiterated a sell rating on the stock. Yeah. They've obviously been wrong for a long way on the stock, so that doesn't mean all that much. But now, as you get this stock closer to $2 trillion, you are going to have more firms coming out and questioning whether, the multiple has gotten too rich, it's expanded too fast.
Absolutely. And if you look at the rationale for this downgrade, it really does read like a lot of excuses for downgrading a stock to neutral and taking profits, the one that's gotten ahead of itself and looks overbought. I mean, Apple yesterday got to 45% above its 200-day average. That's a technical measure, but it's way richer relative to its trend than it was back in the top in February. So obviously, maybe it needs a cooling off period. Doesn't mean it's a total reversal of the trend, but it's tougher to make the case for new money into the stock at these levels, especially, by the way, to the degree that the excitement lately is about a 4-for-1 stock split that the company's going to do. That's never necessarily an enduring reason that the value of the shares should be going higher.
Hey, Mike, to your point on that, this really is a laundry list reading through some of this stuff. Scott talked about a lot of the issues they cite, but they also talk about the antitrust regulation potential out there for the App Store. And they mentioned the China trade risks that create additional risk to some of these things. So there's a huge laundry list. You're right. These are the things everybody's been talking about. The headline has to be the huge run-up they've seen, and all of a sudden, okay, the risk-reward scenario changes a bit based on that.
That's exactly it. It's not so much that they're predicting any of these bad things happen, but that the price right now does not necessarily account for a high likelihood of anything going wrong from here. So see how it trades today on this downgrade.
For the most part, downgrades haven't mattered much to Apple. I remember the day that Goldman, Becky, reiterated their sell. It really wasn't. It was a couple of weeks ago. Stock didn't react negatively to that at all. It's almost like the market laughs at people who try and get off the Apple train, or at least put the yellow light up and say maybe it's time for a little bit of caution, that you can't just have a go green for the entire time.
Well, it laughs until the stock's kind of ready and gotten overdone already. I mean, we've had long periods of time when it's gone sideways, even in this massive run of the last few years. So see if this is the time.